Right now, Kunal is here in the studios. Let's ask him whether yesterday's good work is going to get undone. Kunal, hi, good morning. Seems like we are pegging back by 200 points already, looking at the Gift Nifty.
Yeah, I think there has been some change in terms of data points. For example, the last 2 days we've seen the market breadth to be negative. Yesterday, I think the net market breadth at one point was, or at the close, was down by 800, which means more number of declines as compared to the advances. There's been unwinding in terms of open interest for both Nifty futures and Bank Nifty futures. So that's also a bigger concern for the markets. We were almost at 1.7, 1.6 on the put call ratio for the indices, and that was a very elevated kind of a put call ratio, which calls in for some sort of a moderation. So when we look at the data points, it indicates that the markets are about to go into a mean reversion phase. We discussed this point yesterday also that there could be a mean reversion possible where 24,000, 24,200 could be the fresh range which the index can try and settle back into.
Casualties, what would those be in terms of sectors if the Nifty were to mean revert to those levels?
See, I think sectors which have done very well, they could be the ones which could see some profit booking. So it's the stance of traders. If they see that this could just be a mild correction or a mean reversion, why not take out some profits? So, for example, realty could be one of the sectors which has done very well. That's one sector which could probably see some bit of ebb off or price correction or a profit booking as such. You might probably see private sector banking names, especially the performing ones which have done very well. They could see some bit of profit booking.
Kunal, the options market is factoring in that we may go back to 24,000 because the kind of additions that we saw at 24,000 strike yesterday, we touched 24,500 and then retraced back, and then after that the positioning which came in for the July 14 series is more to do with holding on to the 24,000 level.
Yeah, and it's also got to do, Sajid, with a lot of those delta neutral strategies also which plays out, because when you're looking at 24,000 as a major hub, 500 points plus minus becomes the major strikes where you see generally the markets swinging back. So, earlier we were testing 23,600, 650 levels, and from there we bounced back. Now we were at a point where the markets tested 24,500 mark, from where we've seen a correction. So it's like more like the markets are expecting or wanting that the index remains into this 1,000 points range or 500 points plus minus 24,000 mark. But I think that's more of option peculiarities in terms of trades. The stance in which we look at for, when we determine whether the index trend is positive or negative, is we look at the monthly PCR. When the monthly put call ratio is above 1, then we expect the markets, the tone of the markets or the undertone of the markets to still remain positive. Till yesterday's closing, the monthly PCR was still at 1.16, 1.15 on the Nifty, which means that the undertone for the market still remains to be on the positive side. But it's just that because of that profit booking mode, we might come back from 1.15 to say 1.1 or 1 levels for the index.
Kunal, would the trade on IT hold, as was the case yesterday? I mean, everything from an HCLT, Techem, Infosys, TCS to a Naukri, Persistent, Emphasis, the entire sector flare up after a day's break day before. Today in the weakness, could you see these stocks come off?
Yeah, there could be slight bit of profit booking over there, which could happen, but I don't see a major mean reversion unless the news flow starts to deteriorate now, because the markets would not now want to see evidence in terms of substantial crack, because earlier it was more of anticipation. You had few odd stocks like maybe KPIT and Persistent, etc., which had seen a sharp sell-off, and maybe HCL Tech also, I think, a few weeks back when there was a sharp sell-off. But these stocks have had seen a bounce back from those levels. There has been some degree of covering up of the gap. For example, Persistent fell by almost 10%, 12% on that single day, but the stock has managed to recover that fall from 4,800 to almost 4,400 levels for the stock price, and managed to come back again. Similar is the case, broadly for names like HCL Tech. So when you see stocks bouncing back after a sharp correction, it tells you that the markets are now moving beyond those big shocker in terms of news flow, unless there is something more deteriorating which starts to happen.
Kunal, picks in a market like this?
So I'll go with one buy and one sell. The first one would be a sell on one of the weaker charts, which is Tata Motors PV. That's a stock which has been showing signs of consistent weakness over the recent past. In fact, from the auto pack, has been one of the more relatively weaker stock with respect to its other peers. So would look at a target of 340 for the stock, stop loss to be kept at 353. The second would be a buy on PNB Housing. So that could be a differentiated stock, because the stock has confirmed a breakout on a multiple time frame series chart, both on the daily as well as on the weekly time frame. We're seeing the stock confirming a swing breakout, a moving average breakout, a crossover above those key moving averages for the stock on the daily time frame chart. So we look at a target of the 1155 for PNB Housing, stop loss at 1085.
Okay, let's take a very quick break on that note. When we come back, as always, the newsmakers this morning.